Tesla is continuing down today. We are down $8.36. That's 3.36%, closed at 240.66. Let's take a look at what this means on the chart. So we are back to 238.09. Remember that 238? This is where we stopped in July of this year when we had the big move. Remember the big move? We had identified that we were breaking 194.36. Boom. We went right up to 265.32, exactly the same number that we were back a couple of days ago. So, these lines mean something. They tell us where the sellers overpower the buyer. The red lines indicate where the sellers overpower the buyers. Hence, they don't cross the line. The sellers are too strong. There are so many sellers that buyers don't need to pay higher than 265.32 to get a share. They can get it at lower than that number. So we have exactly the same thing that is being reproduced right here. Exactly the same numbers, 265.32, the support where the buyers overpower the sellers at 238.09. Exactly the same thing. So I will be removing these small lines right here because the congestion zone that we are in is right there. If we start breaking 238.09, then we should get back to 226.18. And 226.18, we have important buyers that are hiding there. 226 right here. And we also have another set of buyers which are gradually increasing their buy position at a higher price. So we have this support line right there, this support line right there. So we could be bouncing there. Let's take a look at the 1 hour chart to understand better how this happened today. This is the downward channel that we are in on the 1 hour chart. And we are just continuing on that channel. Yesterday, we were above this support right here, this bullish channel support. So we stopped there yesterday. And today we are stopping, as I said, at 238. We should be expecting Tesla stock to go sideways within this congestion zone. And as I said, if we break 238, boom, we go back to 226. So if you want to sell covered calls above 265.32 is still a great idea. It's even a better idea since we started going back down. The chances are lower that you will get exercise on your calls. Let's take a look at the indicators. So in terms of indicators, stochastic is below 60. We always like to have stochastic over 60 to confirm that a stock is really moving higher. So we have lost that stochastic. Also, MACD has crossed over bearish. So this is the first indication that things are pulling back. So MACD is interesting because we have the two lines of MACD. And my MACD has different colors than the regular MACD because I think it makes more sense to have a green and a red line instead of a blue line and red line that don't mean anything. We are in pullback mode. When we have a cross of the lines, this is either a pullback mode once we were going higher or a pullback mode once we were going lower. And also when the two lines of MACD are above zero, this is a bullish sign. And this became above zero approximately here, not too far away from our first buy signal right here at 226, which reverted the next day, but then came back. This is how we need to interpret MACD. So we have a green thumb up because the two lines are above zero, but we have a red thumb down because we have the bearish crossover where the red line is above the green line. And everything else is pretty much it. Let's take a look at the rest of the market. VIX is continuing higher, 1.67, 8%. So we are getting very close to where we were not too long ago. It's September. So instability in the market. So be very careful with the stocks that you own and be ready to get out. In terms of economic data, we had the ISM services PMI that came out. We are at 54.9 and the forecast and the consensus were at 51. This is the sign that the services economy is growing. And tomorrow we are going to get at 7:30 the non-farm payrolls. How much are we going to have an increase in payroll? This is forecasted between 140 and 130, and also the employment rate is going to be shown. Let's take a look at our stock indices. So yes, we are caving in. Dow Jones is caving in very, very slowly, still above the moving average. We could easily go back to 41,368. S&P 500 back below our big resistance that has been in play for a while. So we have a little bit of a caving in right here, still above the moving average. So, things are not that bad. This could be just a little bit of a pullback. So this is the channel that we are in. We also have this support. We are into a bullish channel since August. So this could be helping us rebound on it. We'll see. And Nasdaq, an okay day today. Yes, we are a little bit lower, but we are really finding support at 19,626, also coinciding with the moving average. So everything is good from that front. So Tesla is just into a pullback mode, and we are still above 238. Nothing too catastrophic right here. We have the earnings call on October 23rd. So maybe until then, things are not going to be that good. So selling covered calls from now till then would be easy. And then after the 23rd, then nobody knows what is going to happen. Based on the deliveries at 462,000, I don't know if we are going to get a big increase in profitability. We'll see. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.